Phil. For more now, we turn to Phil Streible, senior market strategist at MF Global, and Phil joins me from the floor of the CME. Welcome, Phil. Good to have you back once again on Fast Forward. So I'm taking a look at gold spot now, dropping about $39 on the day, so we're well below $1,800. What are the critical levels you're watching for?
Well, I mean, on the gold market, really, if you take that high that we had over 1917 and that low of 1705, you draw yourself a Fibonacci retracement. You can see we got up to about the 62% level, which means we recovered 62% of that sell-off, and we started to fail at 1839. Now with the market, if it closes below 1800, it's continuing to lose that upward momentum, and we're seeing a lot of investors start to abandon the long gold position. And it looks like as long as we stay, on a closing basis below 1839, I think we're targeting 1705.
And when do we hit that 1705?
The way gold market is moving so fast, it's completely possible that it happens within a few days. I mean, investors are still weighing in on, how safe is this investment? They've already increased margin requirements. We heard some speculation or a little bit of chatter that there may be another margin hike coming right around the board. And then also look at your other outside investments that are supposed to be your safety type plays, the Swiss franc, the volatility index, and treasuries. They're all coming off very hard. And I think that if there's further liquidation in those, gold prices will probably continue to come off.
But Phil, you and I have both lived through days similar to the ones that we're seeing today, where we're actually seeing a rally, and it's proven to be short-lived in the last, say, month and a half. So do you think that there's enough volume out there to suggest that trading is going to continue in the current direction that we're headed today?
Well, if you're looking at the S&P 500, I mean, we're really starting to gather a little bit more volume as the day's going on. We're right near this 200-day moving average, and if we take out 1206, I think the S&P could shoot up to about 1250, and I think the Dow Jones is doing the same thing, and that would, correlate with the gold prices selling off and that Dow and S&P rallying.
How headline-driven do you think these markets are today? We did get some poor economic data out. We also got some positive data in terms of spending. Markets seem to be more focused on that at the moment, and maybe some relief after Hurricane Irene turned out not to be quite as bad a storm as expected.
Well, I think that, Bernanke, his statement coming out on Friday where no additional, QE was required right away, I think that gave people the thought process that we weren't deteriorating as fast, and that's what really started the rally on the S&P. We saw that rally, build Friday afternoon. We're starting to get, further momentum on it, and really Friday's jobs report is going to be the determination. A lot of the economists out there have lowered their estimates. We're looking at right around 80,000 jobs created. If we get anywhere near that, or we get the unemployment rate still at 9.1%, I think investors will be happy and will continue moving higher.
Let's say we don't get that number, Phil. How quickly could we see a rally like the one we're seeing today disappear?
Nah, it is quite possible that it happens abruptly. So coming in probably about Thursday, we'll start looking at very short-term S&P put options and then also gold call options to try and hedge investors. As long as we can get some kind of movement up, 1220, 1225 coming into Thursday, we'll look at those 1200 puts, and then the same thing on the gold. We're going to be looking at those 1840 calls because any breakup up above there should suggest 1900s back in the works.
All right, so come this Thursday, Phil, hopefully we'll be checking in with you, but that's when you want to buy some insurance. It sounds like some puts on the S&P 500 at what, maybe the 1250 level you said, and then maybe some calls on gold.
Well, I said if we get up to like 12 and a quarter, look at 1200 puts, and then on the gold, if we're back below 1800 or anywhere below 1840, look at those 1840 call options, because those are going to be your trend reversal points.
All right. Got to write it down in the notebook. Thanks so much, Phil. Always a pleasure to have you here on Fast Forward. That was Phil Streible of the MF Global.